Hi guys, welcome back to the channel. So recently Donald Trump has been making headlines again with his recent announcement that he wanted to do something revolutionary, right? He's like, okay, I'm just going to do something that's great, that's going to be bold. And then he announced 50-year mortgages. Okay, his federal housing agency director, Bill Pulte, called it a complete game changer. It's a game changer, guys. Okay, and on Trump's Truth Social, this is the post that he had up there. You can see the comparison of him side by side with FDR. On the one side, it says 30-year mortgage. And then the other one says, 50-year mortgage. Great presidents, great American presidents, it says. It's like it almost kind of want to say like Trump is doing something even bigger than FDR, right? FDR, who saved, who basically was there during the Great Depression. So Trump is going to do something even greater than that, right? But here's the problem: he's not. He's not. Okay, and it's way worse than it sounds. Okay, here's the other thing. Okay, so let's do some math for a second here. Okay. Because this is where the trapdoor opens. Let's say you're looking for a house at $400,000, right? Which is pretty average right now. With a 30-year mortgage at 6.25 interest rate, you're going to pay about roughly $2,200 a month, right? Now with a 50-year version, you're going to be paying about $2,000 a month, right? Sounds good. Hey, you know what? It's lower. It's lowered my payments. Why not? That's, you figure, hey, you know what? I'm going to save about $266 a month. That amount of money is barely enough to cover an extra coffee and streaming services for about a year. All right. But here's where it gets ugly. On that same $400,000 home that you just paid, you be paying about $438,000 in total interest over 30 years. I think it's still a lot of money. The bank basically charge you for two houses, basically, right? Now check this out. With a 50-year mortgage, you're going to pay $816,000 in interest, almost double what you would have paid on a normal mortgage. Some analysts even put that number even higher. On a $450,000 home at the same rate, 6.25, you're looking at an interest payment over the life of that loan over 30 years of $547,000, right? Now you take that same loan, the 50-year mortgage, you're going to pay over $1 million, $1.2 million. That is 87% more than what you would have paid with a 30-year mortgage. Okay, so let that sink in for a second. Sure, you're going to be saving a few $100s a month and so on and so forth, but you're going to be paying nearly $400,000 more in total interest payments over the life of that loan. Okay. Here's another thing people don't talk about enough: equity. When you pay your mortgage right now, you are building wealth. If you own a home and you pay a mortgage, you're building wealth. But with a 50-year loan, you're basically paying interest for decades before you actually start owning your house. On a 30-year mortgage, most people build about $100,000 in equity within, I want to say, 10 to 12 to 13 years or so, something like that. But on a 50-year mortgage, it's going to take you 30 years. You're paying for 30 years just to get where you'd be if you had for 30 years, the amount of mortgage, the amount of interest that you pay, it's going to take you 30 years to get there where normally it would have taken you 12 years on a standard 30-year mortgage, okay? That's insane for building wealth. It's impossible. Under no circumstances should you ever take on a mortgage like this. It is a disaster, okay? Now, Trump put the picture up there with him and FDR. So let's talk about FDR real quick. Okay, here's the thing that people don't realize. Okay, about this 30-year mortgage thing. At the time when FDR did this, it was revolutionary. Okay, but I don't know, maybe not for the reasons that Trump teams think that it is. Okay, before FDR, mortgages were death traps. Okay, they had a balloon payment. So basically they were between 3 to 5 years. You pay for 5 years and then suddenly have to pay the balloon, the entire remaining lump sum, the entire remaining balance. You have to pay all that in one lump sum. When the Great Depression hit and the banks failed, people couldn't refinance. About 50, because there's no money. There's no money left. People couldn't do it. About 50% of all mortgages were in default, and 25% were headed to foreclosure. So the FDR administration came in and see the disaster, what is going on with the mortgage markets and people losing their homes and the way the system was set up. Okay, so he created what is called the Homeowners Loan Corporation and established the 30-year mortgage fixed, the 30-year fixed rate mortgage. Okay, at the time it was pretty clever. Okay, it was, the reason why they did this at the time. It was designed so people can pay off their mortgage during their working years. At that time, the average lifespan of Americans were about 66 years old. So a 30-year mortgage meant that you would finish paying off your house by the time you're 61 or so, and then you retire. You would retire with the house paid off, and you would have a secure asset. It wasn't about monthly payments and making it cheaper. It was about making homes, ownable, and building wealth. It was making it so that you can own this piece of property. You can build wealth in your senior years. Okay, so where you have no more payments to make. The problem is now is the lifespan problem with this disastrous mortgage thing. Okay, so now let's fast forward to 2025. The average American, the average people, the average home buyer right now in America, it's about 40 years old. If you give a 40-year-old a 50-year mortgage, people, let's do the math. By the time you're done paying this thing, you are 90 years old. The average American life expectancy is 79 years old. I mean, let's do the math here. You are literally asking people to potentially pass on their mortgage debt to their kids. Here's the kicker. A 50-year mortgage doesn't actually fix anything. It does nothing. It fixes nothing about the housing crisis. Okay, it's a Band-Aid on a bullet wound. The real problem is we don't have enough houses. Home builders can't build fast enough because of supply chain issues. This problem existed before the supply chain issues, but the supply chain is adding to this. Is basically exacerbating the problem, right? So you have a supply chain issue, you have labor shortages, especially after this whole immigration thing. However you feel about that. Tariffs on construction material, and regulatory red tape. A 50-year mortgage does not build a single house, not one. It doesn't lower the price of lumber or steel. It doesn't hire one single new construction worker. All it does is just spreads the pain over 20 years. Worse, some economists argue that it could actually make homes more expensive. I agree. I think homes are going to get more expensive. I mean, think about it. If let's say a house, $500,000, and you're like, hey man, the mortgage is too high for me. Let's say the mortgage on the $500,000 home is like, I don't know, let's say $2,000. At $800,000, you might still be paying $2,000, but it's over 50 years. Now the price of the house just went up, but your payments can stay the same as a $500,000 house, but you're paying more. Like, yeah, right. You get the math. You get what I'm saying? Because then what you're doing, you're stretching the payment for so long. Then you could afford more house, right? Simple math. All right. Also, too, the problem is now you're making banks give mortgages to people who normally wouldn't be able to afford it to buy a house. Basically, what you're gonna do is you're gonna flood the market that's already starved for supply. You're gonna add more people out here in the housing market looking for houses. What do you think that's going to do? You have more people looking for a limited supply of things, basic economics. The prices are going to go up. Okay. Here's another one. One more thing. This administration kind of, glossing over. 50-year mortgages would have higher interest rates than 30-year mortgages. Why? Because lenders are now taking on more risk, carrying a mortgage for 20 extra more years. So those like earlier, those $200, almost $300 monthly savings, that could shrink to almost nothing, zero. Okay. So you're not, this little bit of savings is meaningless. It's not going to do anything. If the prices go up, it's going to be a wash. Okay. here's the other thing also. But here's where I think this thing's not going to go anywhere. And I don't even know why they announced it. Maybe to make headlines, to shift attention from to something else. But here's a big problem. There's a massive problem with this bill. It is called the Dodd-Frank Act. Okay. The Dodd-Frank Act specifically says Fannie Mae and Freddie Mac, the government agencies that guarantee almost all mortgages in America, cannot insure mortgages that is longer than 30 years. So for this to work, Congress would have to amend that law. And right now, there's very little appetite for that. Even Trump seems to he kind of downplay it when asked directly. It's hey, it might help a little bit. Okay, it might help a little bit. Okay. But here's the bottom line, guys. FDR created a 30-year mortgage as a wealth building tool that let people own homes free and clear by retirement. It was pretty clever because it solved a real crisis at the time. Okay. There were immediate foreclosure. There's economic collapse, extending the mortgage at that time for 30 years, it helped solve some of that problem. It helped, soften the blow, as you will. Okay. Trump's 50-year mortgage does the opposite. It's a debt trap disguised as affordability. It saves you a few dollars, a few $100 a month while costing you nearly $400,000 more in additional interest. Okay. It doesn't build equity. It doesn't create supply. It may require you to work until you die just to pay off your house. The real kicker, actually, even the White House was kind of they were upset that this got announced too early. Sources say Trump approved the announcement to get Pulte to shut up about it. And internal officials called the whole thing, a potential weapon among other solutions that they were considering. Yeah, this is a potential weapon. This is one of the things that we have, but, we're just going to keep it on the side for now. This is one of the tools because it's a disaster. I think the blowback they're getting from people with this, they're trying to walk it back a little bit. Okay. And, they're basically admitting we should not have put this out so early. All right. And the stark difference here is that FDR wanted Americans to own homes. This plan right here, this disaster, which I don't think is going to happen. Okay. So for people thinking that I don't think it's going to happen because Congress has to vote on this. I don't think anybody wants that. Okay. What this thing does is basically make you stay in debt forever. Okay. FDR wanted you to own a home. This thing just want you to be a slave, a debt slave. All right. That's a big difference. So that is going to be it for me. That's going to be all for today, guys. If you did find value in this video, please like, share, and subscribe. And I will see you soon.